Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 107. We are here today to discuss Q4 earnings, which will be starting on Monday after hours. We'll be live streaming on the channel starting around 3:30. Going to be a very, very big earnings. It's going to be one of the most monumental earnings to Palantir's trajectory over the next year. And in this episode for the weekly, we're going to break down every single thing about earnings. I'm here with Emir, who's joined us after a month. I'm here with Matt Money, as always, Vince, Arnie, and Dom joining us for the second time this month to discuss Palantir. All right, this is going to be a fun one. We got a lot of stuff to discuss. Amir is going to walk us through a model that he's created a little bit later in the show that kind of proves Palantir is theoretically undervalued, even though I know a lot of people have been saying that valuation versus growth is a little pricey. Maybe there's a way to justify its undervaluation, so we'll talk about that. And we'll get through all the other stuff we have to go through for Q4 earnings. First thing is, I think, the news of the week, which is a deal that we got with Kohl's Superstores. I'm going to get right into it, and then I'll go around the room. Apparently, Kohl's Superstores or supermarkets in Australia has 850 locations. It is the Kroger's of the United States. I got countless DMs from people in Australia saying that this is a very big deal. 3-year partnership. The X community found out that Microsoft tried to build them a data analytics platform in 2019. Maybe they canceled that deal. Maybe they didn't, but they're definitely working with Palantir to operationalize the 10 billion rows of data that they have for that company. Let's start off with you, Dom. What was your initial raw reaction to that deal?
I think I was just really happy to see some more international growth, right? We're seeing great growth in the US. It was nice to see some more expansion in Australia. And just in general, a type of industry that we know they can add value in, and it can be a dominoes effect, right? So if they do this and then can replicate that more in the US with the Kroger's of the world and Costco and other things like that, like the use case is there. So now we want to see a really strong ROI in that first 12 months with Kohl's and see a nice case study come out of that.
Okay. Matt, your thoughts on the Kohl's Supermarkets deal?
Well, I just think it's awesome that we continue to work with other places around the world, right? I think we're establishing new profit centers. We work well with Korea. We work well with Japan. We work well with Australia. So everybody that the West is tight with, meaning the US mostly, is continuing to see great benefits of what this company can do. And so I'm just excited that we're continuing to expand partnerships and into that, and as well as supermarkets, which I think is something that we haven't really established or gotten ourselves into much. But I think it's just another proponent of how logistics and working with Foundry can be hugely beneficial. And I think we'll see that even more with the continued rollout of AIP. I think that will be a huge unlocker for value for anybody in logistics, but also somebody as massively expanding as a grocer.
Vince, your thoughts on this deal?
I was very, very happy. That means international is not sucking anymore. We don't know how good it's doing. It's like everybody else. Very happy about it.
Okay. Arnie, your thoughts?
It is peculiar, as you mentioned, that this is an international deal. And it is peculiar because right now the company is explicitly saying, look, we are targeting all the sales effort in the US commercial. Like I shared a couple of weeks ago, a screenshot of all the sales position of Palantir that were all from the US. And this deal actually comes from the other side of the world. So that's very peculiar. And the second thing that is very peculiar is how they reiterate the AIP contribution, which means that these guys participated to our bootcamp and somehow the bootcamp deliver. We don't know if they were already an onboarding client before, yet we know that AAP bootcamp are contributing massively. And this is the second time it happens in a press release. The other one was for the Horse Racing Association or so. So it's nice to see the momentum also there.
All right. Emir, your thoughts on this deal?
Yeah, I echo a lot of what the other guys said, but I also think that it's a huge clue for us, but unfortunately we don't get any numbers. For example, we know that they are taking over the healthcare space, the aviation space, defense space. We can extrapolate to those numbers, because if we know the contract sizes, we can put that against the whole industry spending and start to extrapolate actual potential revenue value there. As you mentioned, we might later on look at some models for what defense spending might look like. And I think the more hints we get where they actually start to take over whole industries, we can actually start to see the real Palantir potential.
How big do you think this is? To have a very raw estimate, when we see these kind of deals, what kind of, how can I say, revenue per year would you mentally think? No precise number, just a broad range.
I think looking at the size, I would say perhaps this is within the range of 5-6 million per year, if I would just like throw anything out there. But yeah, it's really annoying when we don't know the contract size. I mean, they mentioned the length of the contract, but not the actual spending. I mean, we might see like customer Z or customer Y is spending this much, and then we can get some hints from that if they're actually big enough. But I think more importantly, just like with healthcare, we know that they power, what did you say, like 25 or 40%? I can't remember the actual number, but a certain percentage of all the hospital beds in the US. I mean,
16%.
16, yeah. We can actually use numbers like that to extrapolate into the future. And I think the retailer business is a large old legacy business. So I think there's a lot of money to get from there, because we know that if we look at Walmart and the likes, they have insane amounts of revenue, but very low margins. So if Palantir can actually start to improve those margins, I think we're going to see a huge wave. So I'm waiting for some more hints, but I'm very happy when I see large contracts like this, because I know what it might mean for the future.
Look, you are the SPAC expert. And if you know very well that the SPACs generated a sort of $5 to $8 million per year per customer. So do you think this kind of company is going to pay like a SPAC?
No, I think the SPACs pay more. I mean, Palantir really reamed those poor companies. They got wrecked.
No, because the comparison is like on Glorious. Makes me think like if a SPAC was paying 5.7, I would think of something at least 3x that. Maybe I'm
Really?
completely out of touch, but in my mind, this is like something like this would put them not in the top 20 yet, but let's say top 50. So probably more in the range of 10, 15. Like that's my speculation. But
I mean,
unless they got the deal.
Which deal?
No, I mean, like, unless Palantir did like, okay, you get to use this product for a super discounted price, and then we talk about it after, like how much we charge you.
in 3 years.
Yeah, but I mean, I don't think it's close to top 20. I mean, we're talking like 57 mil there. So yeah, those are my raw thoughts on that.
Okay, cool. Let's go to this part of the podcast. Emir, I want to give you the stage here. You came up. You've been pretty bearish over the past couple of months on the valuation of Palantir, and for good reason. I mean, the growth is just not there, and all of us, quite frankly, objectively on this podcast, have been like, yeah, it's a little bit overvalued here. But you came up with a model, valuation model, that kind of suggested if we apply certain assumptions, it's actually incredibly undervalued. So if you can share your screen and talk to us about those assumptions, and I think everyone can give their thoughts and ideas on how you created this model, and then we'll get into the Q4 preview for Palantir.
I mean, incredibly undervalued might not be correct. But,
okay, well, it's at least not overvalued anymore. That's...
Oh, you're talking about my Seeking Alpha article? You want me to pull it up?
Well, no, the one where you assume the AI spend changes in government.
Oh yeah, it's in the article. But
it's in the article. Okay, perfect.
I haven't prepared anything, but I can show. How do I share my screen?
Yeah, so there's that button at the bottom called Present.
Present.
And then share screen, and then the tab or the window. If it's, you got to press. You got to press share.
My camera is in the way.
It should be on your screen. It shouldn't. You want me to just pull up the article, because I can pull it up myself.
Can you see on Excel?
Oh, there we go. There we go. Perfect. Perfect. Here we go.
There we go.
You're gonna have to zoom in a little bit though.
How do I do that? Maybe just make it smaller and it'll.
Yeah. There you go. Perfect. Yeah. There you go. Perfect. There you go.
Okay, so it got me thinking a bit. I mean, I've heard that Palantir is incredibly undervalued. I saw it as overvalued, but I never actually tried to looking at what the future might entail. For example, Alex Karp is constantly giving us hints that the DoD really needs to up their spending. So I looked at what might that entail for the future. For example, we know that DoD spending, the budgets aren't finalized, of course, but there are several projections of what the DoD spending will look like, defense spending will look like for the next 10 years. So I just used that from Statista. And then I looked at how big is the increase. It's not a big increase, but roughly in line with what I guess GDP will look like. And then we have how much are they actually spending on AI? And this is an interesting one because Xiam on Twitter said that 0.2% of defense spending is on AI. But Alex Karp says something like 0.5%, which I also used here because, I mean, how you capture AI spend probably varies. If you just look at the tender out there that's been awarded, I mean, it doesn't give you a clear picture. So it's really hard to know the exact number, but I went with Karp's number, and from what I could gather myself, looking at usaspending.gov, but roughly 0.5% for 2023 was spent on AI. And then I look at, okay, we know that roughly 77% of Palantir's government income is from the defense space. So I use 77% of that moving forwards. And then I just looked how big is Palantir's market share. So currently, Palantir's market share of AI spend in the defense is 25%, which makes you wonder who's occupying the other 75%. That's a big mystery to me. I thought Palantir would have more than 25%, maybe half. But there are some other players, so there actually is competition here. But I assume that Palantir won't lose any market share. I think they're going to keep 25%, especially considering how Karp is commenting that spend should move more to proven solutions on the battlefield. Like they shouldn't gamble with the defense budget. They should actually just use proven solutions, and they've had plenty of opportunity to prove themselves. So I assume that they will keep 25%. And then I just extrapolated it 10 years out. So Palantir keeps 25% market share, but the AI spend portion of the defense budget will slowly increase, as we can see here, to 5%, which is what Karp says that ultimately 5% of the defense spending should go towards AI.
This is from, okay, so hold on. This is AI spending, meaning AI software procurement increases every year by 5%, correct?
No, not even close. So for 24, we go from 0.5 to 0.66%.
Okay.
Of the defense budget towards AI. I mean, that's tiny, that's minuscule, especially when we know how efficient the AI solutions are within this space and how important it will be moving forwards. So I slowly ramped that. In 25, we have 1%, and then 1.5, because Alex Karp believes that you should roughly increase that by 0.5% per year. So I went with something like that, even though it's a slow start. And then we end up in 2033 with 5% of the defense budget going towards AI. And if we assume 25% market share, that Palantir keeps their market share of that, it would mean 15.6 billion of government revenue in 2033. So there we have our first component. And it's really interesting because it's still way larger than I project commercial to be. I know me and Arnie have been really bullish on the defense spending. and the government segment, even though many others haven't really been. But this also doesn't take into account NATO expanding or other parts of the government spending to increase, for example, like preventing wildfires and a lot of other natural disasters, because I have the rest of the 23% growing at like 20% only, so the current clip. So this could actually be a base case, and there could be something way more bullish into the future. Anyway,
Amir,
so that's my
also
first.
with the government spending now and the allies that they're helping out, or the war use cases with Ukraine and Israel, I don't believe we've seen any actual revenue attribution publicly shared for that yet, right? So, I mean, from that perspective, could we possibly see some upside, say 12 months from now, 24 months from now, where I know that they got the business to rebuild Ukraine and they're obviously helping Israel very much right now. I'm curious as to what those revenues will look like.
Yeah, me too. And unfortunately, all parts of the world aren't as transparent as, for example, Sweden or the US, where we can actually see outstanding tenders and we can see who is awarded and how much they are awarded per contract. So it's really difficult in this scenario to actually try to extrapolate that unless we get some actual figures, which we haven't. So we don't know if they've even received a single dollar out of Ukraine yet on paper. We don't know that. We don't know how much we've gotten from Israel. We don't know how much the other NATO allies are bolstering their defenses using Palantir after seeing it in action. We don't know that, so I didn't actually include it here, which is why I think this might be an actual low number, because I have the rest of the defense spending just growing at a 15 to 20% clip, which is the current rate. So the increase here from the DoD is only 77% of government revenue, which is the last known figure. I think in 21, there was a Piper Sandler report that showed us some of the income sources for government. And you could also use usaspending.gov and all the other procurement publishing sites to try to gather where is Palantir getting their revenue from. But the last known figure, I think, was in 21. I think Arnie reported on that. So I just used those figures for defense spending.
I can tell you that from an analyst perspective, this uncertainty of I have no effing idea of what number should I put is really the worst thing an analyst can dream of. And that also partly explains why analysts are so confused, because especially those who are more from outside, more, for instance, the guy from Citi, who just covers the Snowflakes, the ServiceNow, these kind of companies, so the real commercial companies, they have no idea, like completely zero idea about the government side. While Mariana, for instance, is an analyst that starts from the defense side, so that's why their team underscore, look a second, like the government side is already very valuable, because even if they don't know like how things will project in the future, they have a sense of, okay, this company actually has weight inside the DoD and has weight gradually also with the defense company. For instance, just this week, there was a release from how Palantir actually contributed with Babcock to improve the new product. And there is also a topic that typically these defense contractors tend to be kind of linear. At this point, we have like the key 5 big contractors. They have a lot of backlog. That is like you already know from now, essentially more or less what will be the revenues in 3 years, 5 years. So it's very linear. With Palantir, everything is completely, I can't say random, but it exposes to a lot of big question marks. And for instance, when Emir was saying we don't really know the size of the contract, I was thinking, look, for instance, the reconstruction of Ukraine, like how big that could possibly be. Like they don't mention it, but that could be something like potentially like 100 million per year. I mean, if you reconstruct the entire country, you are like the Palantir inside all the departments, and you sort of have a monopoly power on that, paid by BlackRock and the US government, by the way. So it's like you have no idea how much value can be. So it's like we are exposed to these positive externalities in terms of it's like we have a lot of call options. We need to embrace the fact that we will never know until it is disclosed.
Let me ask this question. Do you think, and I'll ask this to the whole panel, do you think it's fair to have Emir's assumptions that AI spend will actually increase in the DoD, or is that an assumption that is not necessarily the best to affirm right now? Or to
I
assume
think
right
it's a given, and we just don't know the time frame. I mean, it's obvious that the allocation of the budget has been really poor, especially knowing where we know that AI is where it will matter moving forwards, and it's been proven time and time again recently during these insecurities in the world. But even assuming this, I mean, it's still not growing at 30% CAGR. So I don't think it's outrageous at all. And my assumptions, as we mentioned, don't account for any other large increases in income from, as Arnie mentioned, Ukraine. I mean, Ukraine rebuilding, what does that entail? Is it just helping deconstruction, or is it also helping set up the infrastructure for the business side? We know that they're powerful within a lot of industries, and we know that the Ukrainians are familiar with the product. I mean, it could be huge, and that's just one use case. So
Emir, based on your model, what is the fair value for Palantir right now?
I mean, we didn't get into the rest of the numbers, but currently the fair value is roughly $19 per share.
Assuming the increases in AI spend. Okay.
Well, there's a lot of more numbers, but the biggest driver is the government side, which I have at 28.3% CAGR over the next 10 years. Commercial will be slightly faster, but it's not enough to catch up, considering that the government is making up the majority of the revenues currently.
And what's the total revenue CAGR over the next 10 years in your model?
I didn't calculate that. I don't have the formula here, but
it looks like it's 25%. It looks like that's kind of what.
No, it will be somewhere around 28.7%. CAGR. So roughly 30%. We can use that. We can't be precise. We can try to be accurate, but precise is way more difficult. So how I calculated commercial revenue, I mean, it would be lovely, as I mentioned, if we know that Palantir has this much market share within healthcare. They have this much market share within the aviation industry, and we know that they spend this much and they're going to spend an increase of 5% per year. I mean, we don't have those numbers today. And my goal is that we will be able to extrapolate that moving forward. But currently, we don't have that, so we have to make assumptions. So what I used is the AI software market projections by Precedence Research. And it goes up to 1.3 trillion by 2033. And then I just look how much of that is Palantir's current market share, which is roughly 0.56%. And then I have them slowly gaining market share within AI software markets up to 0.9%. So by 2033, Palantir will roughly make up 1% of the AI software market spending, which isn't outrageous to me at all. I mean, it's more like a base case, especially considering the more and more use cases, the more and more proven industry takeovers we see. So 1% of AI software market spend by 2033, I think it's not unreasonable at all, which would mean that we have roughly 28 billion of revenue in 2033. And then I just extrapolate some share dilution, because we have to capture that. I mean, it's a common mistake when you make a DCF model that you don't capture the dilution of the shares, because it impacts the per share free cash flows a lot each period. So then I just run a standard. I don't count buybacks because it's taken from cash and free cash flow in the future. So if I would include buybacks, I would essentially double count the free cash flow. So I don't model in buybacks for that reason, because it would be double counting the actual free cash flow here. And then I just run a standard model, and we end up at $90 per share value for Palantir currently using these assumptions, which I actually think aren't. I think they're pretty fair assumptions, perhaps even to the more bearish side. One
I think there's just so many things that you can't factor in DCF or any kind of mathematical model when you look at innovative companies like Palantir, Tesla, NVIDIA, so many others. People forget that the innovation can't be factored into the DCF. And so I think it's laughable when Wall Street and everyone tries to, and Arnie, you were an analyst of trying to pinpoint a price and what the valuation is. When AWS first came out, people had no idea what the valuation and capabilities and what cloud computing would do for the world. We did not know the impact the iPhone was going to have. And so when you look at the difference in the technology and what Foundry and AIP offer, like something that's not talked about enough around what Palantir could be, it could be the building block for majority of future software companies with Foundry Marketplace. Like, think about the build it or buy it concept. If you're going to get the maximum, and Lunar and me were kind of exchanging back and forth in the chat, they're targeting industries when they're selling their product to industries that do not have a lot of margin, who are trying to improve efficiencies and improve operations, especially legacy type of industries. So that's where they've had a lot of these big deals. You look at retail, you look at energy, you look at gas and oil, all these different things. But then think about the flip side of all of the innovation that's going to happen with AI and developers and where we're going to be 10 years from now. It could be the next type of quote unquote AWS or anything like that, because it's the platform that people decide to build their applications on.
But I think, Dom, for that to happen, growth has to explode. I think that's the one thing
I just want to push back a bit, because I hear this commonly. People are like, well, if you run a valuation on these innovative companies, you will never catch Tesla, you will never catch Amazon, you will never catch Palantir. But I think it's looking at it the wrong way. If you understand the business, you can actually capture all of this, and you won't miss companies like Palantir unless they're trading exceptionally expensive. And the reason for that is this is not static. I don't run this model and then I just leave it and wait for 10 years and see what happens. No. Every time you see something which affects the business and the projected cash flows, you need to value it again. I mean, that's why it's so time consuming to actually run DCF models, because first you have to understand the business. I mean, as Arnie mentioned, Palantir is covered by analysts, for example, William Blair. They ignore everything that has to do with commercial. They only focus on defense, and they don't even understand the defense part. I mean,
right. That's what I'm saying is
and they will always miss Palantir. But if you actually understand the business, you can actually extrapolate that, because as we've been talking about, we see Palantir revolutionizing X or Y, and you can actually capture that. We can't be precise.
I guess for me, it would be does it matter if it's valued at, let's say, fair market value, $30 a share or $28 a share? It's currently at $17. So for me, and I'm just speaking for me personally, I know everyone's different. A lot of people like to trade stocks. They like to try to do their calls and their options and get rich instantly. But for a company that has $3 billion in cash, 0 in debt, and is changing how things are done, like just adding slowly. Like someone made the comment, $16 is the new $6 when we were all freaking out about $6. Now I'm hitting myself in the head. Like, we all thought it was expensive at $6 and $7. We didn't know if it was going to $5 or $4.
Yeah.
And really not too much fundamentally changed. It just more people woke up to what was capable. So I'm not dissing your model. I'm just saying, for me, it definitely is a lot of work to go through that. And
But also, you are dissing the model a little bit. You're like, get this stupid model out of here.
It's
all right. It's okay.
No,
I'm kudos
just
to him for doing it. I just hope that that's not the deciding factor for a lot of buyers out there that, being picky about $1 here or there. I think his model shows clearly it is undervalued. I mean, I think there's so many use cases that are not even talked about.
I mean,
I just want to say
everyone wants to say something on this. Everyone has their own strategy. Okay, go, Vince. I'm gonna tell you.
Yeah, Emir, shut up. Vince, go ahead.
Yeah, what I want to say is that so many people misunderstand in a DCF that when you get a price, that means that in that second the stock is worth that much. But for example, what would be the stock worth next year? It would be like if you're buying Palantir at fair value, according to Emir's table. Next year, the stock, you would get the growth of the stock. So next year, it would be 28% higher. And then the year after, it would be 28% higher because that's the growth rate that he was counting with. So a lot of people can look at a DCF and say that, oh my God, we're at 17 and the fair value is 19. That's not a deal. But even if you're buying it at 19, you're talking about 28% growth in a stock per year compound for the next 10 years. That's a hell of an investment. And if you go from that logic, even if you're buying at 20, 21, 22, which is over fair value, you're still making an insanely good deal, in my opinion. And a lot of people don't understand this about the DCF model, and they just look, it's too close to fair value, I'm not buying.
Greatly said. And we have to think that a model, by definition, is a model. So a very raw estimate of the reality, which is a tool. So we are not having in our hands the ontology of Palantir that is also able to forecast with accurate AI models the potential development. Like even Palantir itself, with its ontology, can't really assess that. We are just a mere analysts, mere investors, trying at least not to make mistakes. And we have to think of a model as a tool so that we know that, okay, at this price, there are some reasonable assumptions that make us think what we are paying for is not completely detached from the reality, which was actually the case in 2020, 2021, when the company was growing faster. But then you saw a lot of DCFs on YouTube saying Palantir is worth $80 because the company was growing 30%. And these guys projected, oh no, but Palantir is cool, will grow 50 or 60% with 50% margin. So the idea of the model is just to test the reality. I think that's the perspective I also try to share with the reverse DCF. The idea is, especially because these are innovative companies, like Dom said, it is useless to be too precise because, as also Emir shares, the reality is fluid. For these tech companies, it is even more fluid. So once you know that in the ballpark, you are not overpaying, and I would say this is the case, you really need to assess very carefully all the qualitative aspects. Because doing the opposite is exactly why I miss completely Tesla. I understood that they would have rocked the world very early in 2013, 14, and I followed it, okay? But I was keep thinking as an analyst, no, it's too overpriced. I can't touch this. So what I'm doing with Palantir is once the model tell me roughly I'm fine with valuation, I'm not overpaying. For instance, let's make the opposite case. By doing a model like Emir did, if the price from the model were like $5, there would be a problem because it would mean that, okay, with reasonable assumptions, we are definitely overpaying. So we need to be extremely careful because we only make money if the company destroys completely that model in terms of growth. So rather than 30, you need 100% every year in order to justify the valuation. I want to say,
Emir, let me give you 1 minute, and then we got to move on to Q4 earnings. Go ahead, take 1 minute to respond, and then we're done.
Yeah, 1 minute. It's going to be difficult, but exactly as Arnie mentioned, he said it well. I mean, you have to have some sort of anchor, so you know what you're paying for and what you're getting for what you're paying for. I mean, that's why I completely ignore pricing of a stock. And what is pricing? It's looking at multiples. It's way easier. Like, well, this type of company should trade at 20 times price to sales, or this PE ratio. I mean, it's a variable that's subject to emotion. And the market might think that 15 PE is cheap today, and tomorrow 15 PE might be expensive. So I completely ignore all pricing metrics. I just look at the intrinsic value, which is the current value of the future cash flows. And that's my anchor to understand what am I paying for and what am I getting for what I'm paying for. You might think that, well, Palantir is going to be 200 per share in 10 years anyway, so who cares? I mean, yeah, in a vacuum, you might not care, but today, there's a lot of stocks vying for our attention. It's not only Palantir out there. So, you know, if you're paying for fairly for Palantir or not, I mean, you have to put it into well, that's my minute, I guess. I'm not gonna go on a tangent,
Yes,
but
you
I
have to
think
put it into a
Arnie
framework that
well.
allows you to understand how to model. Everyone has their own different ways on modeling this. At the end of the day, if the stock goes up, we all make some money, hopefully.
And just one thing, intrinsic value is personal. Everyone who runs a model, you will get your own fair value. So mine isn't indicative of the whole market or everyone's fair value. It's just mine.
Okay, so Q4 earnings, 36 minutes in the pod. Let's talk about that now. So it's going to be going for a little bit. Dom, let's start off with you. What the hell is going to happen, and what do you expect to happen as a shareholder for Palantir?
Couldn't even tell you. It could either go to 14, could go to 20. I'm looking for one thing. I'm looking for customer growth. I want to see double-digit customer growth. I want to see expansion there. I want to see details on the annual report. If you guys remember back, previously, every year at the actual annual report, we actually typically get some numbers around the acquire, expand, and scale phase. It would be really sweet if we could get some of the details on those still, with AIP now being one of their main go-to-markets. I have a feeling we probably won't see that kind of detail in the actual annual report. But it would be really nice because we know they did, I think, over 500 AIP sessions or something like that within the last 18 months. So it would be really interesting to see how those are progressing. We've heard crazy cases where some people have booked a $40 million deal within a very short amount of time to other ones that are still going through just their basics. So for me, I care about the estimates here. They're saying is 603 million. They're expecting at least 18.7% year-over-year growth. So if they do anything below that, they're going to get chastised like crazy. I mean, you've seen the great earnings that Microsoft and AMD had, and they got burnt, right? So if they have any kind of miss, expect a great chance to have a huge discount. They could surprise everybody and have a great NVIDIA moment, but I don't think that this is that quarter, in my personal opinion.
What could create a miss, in your opinion?
On revenue growth, what could create a miss?
Yeah, I mean, I think one of the things is everyone's expecting the government to really be slow, right? The deal that with NHS won't really count for last quarter, much of it. So that could be a big detractor.
Mm-hmm.
Or another big piece would be that a lot of these AIP deals started small or haven't converted into the full payment stage yet.
Mm-hmm.
And they're still at a phase where they're not actually capturing those profits. So there could be some misses there, because keep in mind, it's a paradigm shift on how they're going to market. Like, they're all in on AIP for sure. So it'll be interesting to see, where they go. But I will say to Emir's point, Carp's been really bullish about throwing some numbers out there of late and talking about things like within the next 12 months, it's not crazy to see that we're a $60 billion market cap and stuff like that. So I think things are going good, but it could go either way. I would say that it's going to be more of an even keel result, and it just stays where it's at is my expectation.
Okay, Matt, your expectations for earnings?
Hey, everybody. Yeah, sorry. I was just, while everyone was chit-chatting about Emir's article, I was doing some numbers in the background just so I had some material to go for you guys. So for me, the thing that I'm most excited about is probably the revenue hitting upper edge. So 2.22 billion is where I'm kind of thinking. Hopefully, I would like to see it to get to 2.25, but that's hoping a lot. And that would mean that we end up, in a fourth quarter revenue perspective, about 605 to 610 million. So that'll get us close to above 19% year over year. I'd like a forecast for 2024 of about 2.7. So I'm hoping that means that growth gets above 20% again, being more specific between 21 and 22%. And ops margin for the fourth quarter, I expect around 31-ish%. I hope to see that continue increase because it was in the low-ish 20s in early last year or I guess early 2023. We've seen it kind of increase towards the 30s in the second half of the year. So I'm hoping that trend kind of continues, and that'll really help us out. I expect top 20 revenue for the customers, top 20 to go from about where it is today, which is like 54 million or so, to about 56-ish million. That's kind of where I'm hoping. So that'll probably increase pretty good sequentially. Adjusted cash flow from operations of about 150 to 160. So that's kind of in line with that 31% ops margin there. But you have to keep in mind that would mean that, let me get to the net income in just a second. So overall for the full year, adjusted cash flow being between 550 and 575. So that's strictly from the business itself. You have to add in the interest income that comes from the $3 billion on the balance sheet. So that will increase your net income, adjusted net income, I should add, to about 610 to 620. So that's where I'm hoping it gets to. And then lastly, what I was mostly hoping to see from an actual development, because I don't think revenue and net income will surprise anybody really this quarter. I still think we're getting AIP truly rolled out. But I expect customers to grow about 43% year over year. That's total customers. So that's from 367 last year in the fourth quarter to about 525. That's an increase from what we saw in the third quarter. But I anticipate with the rollout of AIP and people truly starting to get signed up, that will see an acceleration. And then with commercial customers specifically, going from about 260 customers in the fourth quarter of last year to 390 customers in the fourth quarter of this year. That's a 50% increase. I'd love to see that get above 500 or 400. I'm sorry. For the commercial customers, that'd be about 54%, but that's going to be tough. So that's a lot of people. So I'd say 390. I would love to see that. I'd probably I'd probably turn my frown upside down if we go a little bit below 380 in the commercial customers. But that increase of 50% is asking a lot of the company, but I'm really putting a lot of confidence in what AIP is delivering out there. And I really hope we can continue to see it grow.
Okay, Vince, your thoughts on earnings, and then we'll go to Emir.
What I'm expecting on earnings, as Matt said, I don't think that the past numbers will be really a big surprise. So I agree with him on there. I think the guidance will be very, very important. And I was actually thinking that one thing that could be interesting is if they give for us, low guidance, like let's say they guide for 20%, but we see a hockey stick in new customers. I think that would be interpreted as super bullish by the street, because we know that they scale up with customers, right? So the biggest thing for us is seeing future customers, because then we know that the revenue is going to accelerate in the future. So I think it could be a version that we are going to see a huge increase in new customers. And even though those customers are not yet huge paying customers, it signals that AIP is working and the boot camps are working, and there will be a huge revenue growth down the line. And I think that would lift the stock quite nice. And that's what I'm expecting. I think that we are going to see a nice jump after earnings, my predictions.
Okay. Let's do Arnie, then we'll do Emir at the end. Go ahead, Arnie.
I keep receiving the question, what will the stock do of the earnings? And my answer tends to be always, look, I'm confident the business is evolving and is evolving in the right direction. I have no idea what the stock will do, because the stock will be driven by, yes, the results of the quarter, but more importantly on the confidence that the guidance actually gives to investors. And right now we have seen that with all the other big tech companies, a lot of weight is now on, okay, but how much AI are you generating in your revenues? And maybe so far, Palantir doesn't really have the incentive now to capitalize on getting the most revenues out of the clients. Because think this way, like right now, Palantir doesn't really have the pressure to maximize the revenues. They have the pressure to maximize the certainty that they become the standard for AI implementation, operationalization into the businesses. So if I were Carp right now, like I would bet everything on, I want to be 100% sure that in 3-5 years from now, we are the standard at the cost of not getting the most revenues now. So that would create such a backlog in a goodwill that in 5 years we explode. I would take that bet if I were Carp. But at the end of the spectrum, we are already seeing that Palantir is cheating, as I wrote in this tweet the other day. Could you share the screen, please? Just to tell the long story short, in the last weeks, we have been discussing how bootcamps changed the business. And in just 6 or 7 months, the company completely transformed itself. And I think by visualizing this, we can have a sense that since Palantir introduced AIP, initially internally and then externally to clients, the company is already revolutionizing itself. And now it is defying the gravity, the law of physics. Because in a theoretical world, and well, not in a theoretical world, like what you see normally with other companies is that if you want to grow more, you need to spend more. And by spending more, you need to decrease the margins because you spend in marketing mainly. And what Palantir has been achieving so far, and this is very peculiar, only Palantir and ServiceNow are sharing something like this. They are growing more, and we see this black line of the revenues essentially bottoming at around 15%, now close to 20%, and expected to keep increasing in space above around 20%, while also having the margins, which were already high, going even higher, and they guided for even higher revenues. So it's like Palantir with AAP optimizing themselves so much that is like having I can't say infinite return on investment on AAP, but it is essentially changing the law of physics. And this dynamic alone, if can continue, and the Palantir is betting the entire company on this to succeed, can really transform the company. So my key point with the quarter is I do want to see that Palantir is making crazy steps, significant steps, that it is becoming the reference, the standard for AI implementation. Because if that is true, and the numbers keep changing in this direction, the assumptions that Emir shared, which are already quite good and quite optimistic compared with the average company, could be completely destroyed. And that's essentially my big bet. So hints that we are going to see these two curves keep improving, meaning that Palantir could reach higher marginality while also growing faster, are the most important things.
But do you contribute the past 2 quarters to the AIP launch or not? Because looking at the growth rates, I mean, we've seen a small acceleration, so it could explain that, but I don't think it's attributable to AIP yet. We know there's been an EBIT margin expansion, but I don't think that's attributable to AIP yet either. So
I would attribute a lot to AIP for 2 reasons. On the cost side, making bootcamps is extremely more efficient to acquire a new customer. Dom said, I wish to see the acquire expand phase. And I think with bootcamps, there is no phase. There is, you become a customer and essentially you cost nothing to acquire and you start generating revenues, which means by definition, you already start at the second phase. You don't have that 6 6 months of pregnancy, hoping the baby comes out.
But what about Carp's comments then on not having a monetization strategy on AIP? Because this implies that they actually do have one, right?
Well, if you look at the revenues that are coming out from the new clients, so if you break down not the expansion of existing customers, but the new customers, we saw that a lot of the growth of the last quarter was actually from new customers. What this tells us, and we can also incorporate what CodeStrap shared, is like the fact that you need you need Foundry to deploy AIP, tells us that companies are waking up, holy shish, I need to implement Foundry. So maybe we are not seeing that revenue acceleration directly from AIP, sold as AIP, because Carp says, we don't have pricing strategy, blah, blah, blah. So maybe all these sales are driven by Foundry, but these Foundry sales are driven by the fact that, hey, I need to operationalize. I need AI in my business. Remember also what the CEO of ServiceNow shared. AI is not only a cool thing. CEOs now want this. They want it now. They are tired. They are depressed of dealing with software solutions that don't work. And now they want something that works. So how it works? Well, Palantir does that. Okay, you start by implementing Foundry, and then you start playing with your AIP thing, and then you say, okay, I want this to scale into my company. So what I see as like the contribution of AIP is on the margin side. Internally, bootcamps are extremely more efficient. Palantir itself is using AIP, so rather than having a horde of monkeys doing things that could be done by an algo, they have a bot, a AIP bot doing those stuff, which increase the margins. And on the revenue side, is like in order to implement AI in your business, you need to have an ontology, Foundry essentially. So these sales are driven by Foundry, and which tells us that there is still another big option once /if AIP is then really monetized, once it delivers value. Like that's the picture I see.
Okay. Emir, your broader expectations, do you agree that customer count's going to go up? Do you agree that's going to help top line revenue? And what is your expectation for the growth rate they're going to give us in guidance?
Yeah, I'm just going to say that thank you for the explanation, Arnie. Yeah, I can share that. As for this current quarter, I think we're going to see roughly...
Real quick, before you continue, Thomas in the chat says, when's earnings again? It's on Monday, Thomas. It's after hours. It's on Monday. That's why we're doing
One Lambo.
It's going to be on Monday. Go ahead, Emir.
I mean, I will give you my projections. I don't really care so much about... it's not much about what they're reporting now. It's basically turning over trends. We've been on a downward spiral on most KPIs. Only recently do we see a re-acceleration, and I ultimately expect that re-acceleration to accelerate. But the most important part is looking for any hints which shows us what may be in store for the future. I mean, we've talked about how will AIP monetization look like, for example. As much as I love on focus on gaining market share, that's been the general AIP outlook. I projected us to know more about AIP by Q1 24. So getting a late Christmas present here would be really nice. As for revenues, I see it growing roughly 22% year over year, which is roughly 11% quarter over quarter. Somewhere around the 620 range, which is above what they guided, but I'm not sure what Wall Street is expecting, but above 620 and would be fine for me. But more importantly, seeing more than 499 customers would be great, because that means that we're growing quarter over quarter more than 10%.
Yep.
And we know that number, that figure has been suffering. It's been on a brutal downward trend.
Well, it was stagnated the past 2 quarters, so it's not downward anymore. But
No, yeah, it stagnated after increasing. That's correct. But
Right.
I mean, if we look at early days when Palantir was relatively less known, it was still kind of fast. I mean, 21, 22. We saw increases like 16% quarter-over-quarter. I mean, that's massive when you compound that, but then it just dropped off. So if we can accelerate that, because now the market opportunity is there, as Arnie mentioned, people want AI, they need AI. They're seeing how it's changing businesses around the world. Everyone wants in on that. So the market outlook is good. And they also have a strategy now, whereas in the past, when they actually grew a bit faster, they didn't have much of a strategy. I mean, it's well known that 21, 22, they were a bit lost on how do we sell this? So actually now I think with the boot camps, it's a great opportunity to acquire customers quickly on a quicker pace. And I think the market is ripe for it as well. So anything above 499 is what I want to see. Even though the number itself is growing larger, the total customer count is growing larger, so it's harder to grow at an increasingly fast pace. I still think that it will keep increasing the coming quarters here. So ultimately 500 or more, and
Do you
I'll
think
be
the NHS
satisfied.
was included in the guidance? Because when the guidance was shared, the NHS was not achieved yet.
Even if it is, it's going to be negligible because it's over like 4 or 5 years, so it's going to be a small amount incrementally.
Mhm.
They're gonna recognize that revenue over the next.
Yeah,
I mean,
years.
at least looking at quarterly impact, I mean, I think it's negligible.
I mean, yeah, annually it was what 4%.
Yeah.
And even that was if they got all the revenue or something like
And
that.
Accenture is
4%,
going to
right?
get some of that. Yeah.
Yeah, maybe for the guidance of the next quarter, it would start impacting. We'll see.
Yeah, we'll see. Anything helps.
Yeah, I mean, any hints about the future trajectory is what I'm really curious about. And actually, more importantly, do we think there's going to be more than 2 analysts on the call this time? I mean, I would really be curious to get your guys' take. Why are no analysts participating? Is it Palantir gatekeeping them, or do they think it's too much of a bother to turn on a camera to actually ask their question? I mean, what's going on here? I mean, this has been insane. I've never seen anything like this.
I think
Such
it's I think it's gatekeeping. I think they
I
have Dan
also
Ives
think
and
so.
Mariana, and those are the 2 most bullish. Like, why don't they have the Brent Thales of the world, the Louis De Palmas? I mean, why
Natty
not?
Capital should send an analyst. I would definitely.
Yeah, but I really dislike that because they're making it comfortable for themselves. I mean, these analysts, they might not be very well versed in everything that Palantir does, but we need more people to ask the hard questions. We can't just have 2 bullish analysts, and if one comes up with a price target of $25 and they're okay, you are invited as well. I mean, it's not good enough. I mean, we need these harsh questions to be asked to the Palantir.
Yeah, but
management, so.
I think they're just keeping away the idiots, like the guys that are coming on and saying like, are you guys really an AI company? Like they maybe don't want them to ask questions, but maybe
But
we
we
should
never
try
had
to
that.
get on.
But no,
I mean, we
it's not
never
those
had that.
people. If they had Brent Thill, the Jeffries guy, he would be asking about hard questions around growth, which I agree with Emir. You got to confront that, just like you got to put the NDR number, not in the fine print, right? Like, look, as investors, we'll deal with bad news, and then we'll decide if we want to sell or if we want to keep it. But you can't hide the bad news, you know?
I mean,
We should try to get on.
Basically, it's our only opportunity to actually get some real answers, because otherwise they control everything they report besides the filings, where you don't get much commentary at all around what are they seeing for the future, how are they gonna tackle this, or how should we think about this metric. I mean, if no one asks those hard questions, I mean, we're just left in the dark, and it's kind of scary actually. That's why earnings conferences are so important, is because you get this insight, this clarity that you can then extrapolate in your own mind and in your own thesis. So I hope that we see more than 2 people. I mean, it's been funny because I've been saying this since like the beginning of Q1, and they only decreased in the amount of analysts included. So, I mean, yeah, I'm really curious about that.
Let me ask this question. Do you guys think there's going to be, do you think they did a buyback at all this quarter? Start with you, Dom. Do you think they did a buyback?
No, they. I don't think they did the buyback yet. I still think that there might be some ideas of what they want to use that $3 billion, especially when interest rates eventually come down. So I don't see them dispersing that cash just yet.
If they did, it's insanely bullish. I mean, Carp sold at 21, Sham sold at 21. They clearly have a feel for where the stock is going, and they have been keeping it off the buyback pedal. So if they did the buyback, it means that they are seeing something that is really, really bullish, I think.
Yeah, I think it's going to be tough to be able to buy back stock. I mean, currently, just from cash flow, operating cash flow, you're only making about 150 at this point. Last quarter was like 130, 136. And so you're still kind of giving out 114 to 120 million after you pay some taxes in share-based compensation. So I think it's going to be pretty tough to offset that at the current point. I think you'll have to wait some time before it's actually meaningful. And to me, I would wait until your cash flow from operations more than exceeds your stock-based compensation by a great margin before I would start using some of that cash flow to buy back stock. But, most of the time when I look at that, companies aren't debt-free and they don't have a crap ton of debt crap ton of cash in the bank, right? So maybe I'm talking out of my ass a little bit, but I think it's just a little bit premature. And I think that they need to figure out something to do with that $3 billion. I didn't think it was a bad idea to put it into treasuries, but even still 5%, that's not really moving the needle when we want this thing to be moving closer to 20% per annum in terms of revenue. So that's just my thoughts.
But are essentially go.
I think first of all, it's not a question as long as yields are high. And we also know that Carp mentioned that they're not cash constrained in terms of their growth rate. So that actually leaves the question, what do you do with this cash pile? I mean, we know that one large factor here is the credibility of the company. When these large countries, these large institutions, these large companies partner with Palantir, they know that they will be there in the future. So it's also signaling to have a really healthy balance sheet. But yeah, it makes no sense to me while yields are high that they will divest that and instead going to repurchasing shares, especially when it will have such a small impact. For now, I mean, it's way too early for me. I think it was more of a PR move when they announced it. And since there's no time limit, I mean, it's going to be there in the back of the truck, waiting to be more convenient in the future. But yeah, while yields are high, I don't see it because it makes no sense.
Yeah, I think the thing that I'm looking forward to, I haven't yet to really see too much from a growth and expansion within South America. Mexico is a great growing country as well. I'd like to see something there if it aligns to the company's goals, right? So that Africa is a massively growing continent, right? Many nations growing way faster than, say, India and China's GDP and America's GDP. So if you're able to capture some of that market as well, I think there's a lot of opportunity there. So I'm very curious as to why they haven't really expanded much. And maybe it's just my ignorance, but if you could find a country that aligns well with the purpose of the organization and meets the Western goals, I think establishing profit centers there would be much more beneficial in the long term in terms of revenue contribution, net income contribution than buying back some stock in the short term.
Just on Africa, isn't a big issue potentially that most countries in Africa are colonized by China? They're being built up by China, indebted deeply to China. I
could say the same about the Caribbean and many other places as well, right? Even to this to the source of rural America, Chinese buying up farmland and setting up Bitcoin farms and stuff like that. So I think it's more evident than we really give credit to in most news media.
The U.S. is indebted to China.
Good point. Yeah, maybe. I haven't thought about that. But yeah, I mean, we have large swaths of the world open to us, potentially. So
to get back to the buyback thing, I would say there are two questions, essentially. The first one is, does the buyback make any sense now? And I would say, why not? Why not? Because the valuation is now, I would say, attractive. I'm personally putting my money where my mouth is. And why is attractive? Because essentially the growth trajectory now is not only doesn't only seem to be stronger, but seems to have a way higher degree of certainty versus just 6 months ago. As we mentioned, the bootcamps, the AAP, and the interest in AI that is not just hype, but is grounded, like CEOs really want and need this stuff, makes me confident in not only seeing a high growth ahead, but that growth to have a very good degree of certainty. Now, is the valuation expensive? I would say absolutely no at this point, given these premises. And since they have a lot of cash, more cash than they actually need, that cash is essentially now parked there, yielding around 5%, while by investing in a company that I expect they know quite enough, they could deploy that cash at an internal rate of return of around 20-30% per year. So analytically, at this point, I would say I would start at least the buyback. If we were at 2021, I would not. But at this point, I would do that. And there are other companies maybe doing something similar. Actually, ServiceNow did buyback, not much, like slightly less than the stock-based compensation, but they did it. So I think there are high probabilities now that Palantir does some buyback, not with the idea of we recollect all the shares around the market because we are deeply cheap, but more because investors at this point would be more confident in seeing us managing this dilution aspect more carefully. ServiceNow did that, and typically, you know that I like to compare ServiceNow and Palantir in terms of financials. If ServiceNow did it, now they have the confirmation that this AI trend is real. I see high probability also Palantir does that. I personally think they will do that. That's no, but we will see.
What do you think Carp's going to talk about when it comes to the geopolitical stuff, Israel stuff? Dom, any thoughts on how you think Carp's going to discuss AI and where the world is going geopolitically?
I don't know how much he'll talk about other than they still stand with them. I don't know how much he can get into detail. We know that they're, I mean, he was there in person. He was there with the president. I mean, we've seen multiple engagements there. So I don't know how much he's going to get in depth about that. He might bring up, though, Taiwan, that's the next. Don't be surprised. I saw someone put Taiwan plus Palantir. I bet you they would jump in and make sure to help out. They understand the importance of protecting that for the U.S. and quite frankly, for the world.
Okay. Vince, any thoughts on geopolitical things Carp might discuss?
I mean, I think what he says all the time. I don't think he's going to bring up anything new.
Okay. Matt, any thoughts?
I think he's just going to reiterate a lot of what he's said in the past. I don't think there's been too much. Well, I guess they've made their stance within Israel, so I think he'll probably talk a little bit about that and mention their strengthening alliance there. I'm trying to think if there's anything there. I think he might mention maybe some of the operations that they may be taking in part in Yemen and maybe some of the other bombings that have happened as well. Who knows if Palantir is involved in that? Most likely, just knowing that they are working with the Army and the Department of Defense. So I wouldn't be surprised if that's a new mention that people might be surprised about as well. So other than that, I mean, he generally keeps up with common themes that are going on in the world. So he might mention Taiwan as well, just based off the fact that China's been strengthening their talks about that over the coming months as well. So yeah, it'll be interesting to see from a geopolitical perspective what he says.
Emir, your thoughts?
Yeah, I mean, the messaging has been the same for years, but the messaging only recently starts to make sense in people's minds. So I don't think we're going to see a huge change there. He might advocate for a budget spend increase towards proven solutions and stuff like that. But it's been a common thing, actually, because Karp, as we all know, he regurgitates the same arguments year over year, but when he starts doing it, it doesn't always make sense in people's heads. But time and time again, he's proving to be right. So I know between me and Arnie, we used to joke like, when Karp talks, you should really like listen, because he's more often than not been right. And I think it's really interesting that the rest of the world are just now waking up to that, which is also why I put so much weight into these statements that he sees a need for budget increases, going to proven solutions, stuff like that. So I put a lot of weight into that because he's been proven to be right most of the time.
I would rate the performance of Karp as a geopolitical analyst completely out of league compared with analysts covering the stock. So Karp so far has discussed a lot of geopolitics, and as Emir shares, it is outstanding how much Karp talks at the moment is like, what the hell are you saying? And then in 1 year, 2 year, you start saying, holy, he was right. What scares me is that he has been saying a lot, be careful, guys, the world is way more dangerous than it actually seems. Be careful, because if you think things will stay quiet, well, ask this question. Do you really see the world becoming more peaceful or more aggressive in 1-2 years? And there are a lot of side risks that are not really digested. And I'll tell you this from experience. Until something really comes close to your house, in your streets, you just think that this stuff is just on the TV. Like that is what happened, for instance, with COVID. Until it is in China, it's like, oh yeah, I'm sorry, but it's in China. And then when COVID arrived here in Italy, it's like, wow, it's here. And then you start seeing the real panic. So far, the things that we have been seeing is like Ukraine, yes, it's closer, but it still is Ukraine. Israel is like, yes, it's close, but is Israel. We really need to
People
pray
would
that
wake up and realize how dangerous it is. We start seeing this happen in Mexico or one of our borders. I mean, to your point, Arnie, like until it hits home and until it's in your house, it doesn't feel real. But he's been pretty spot on about how crazy the world's been. You're spot on, Arnie.
So on the one side is like, I'm happy Karp keeps reminding me, like, don't sleep on these themes. So, and on the other side, please, Karp, don't tell us anything bad.
Okay, cool. So I think we talked about geopolitical stuff. We talked about buybacks. We talked about growth rates, and we talked about the broader assumptions that I think we all are factoring in for 2024. I guess the final question here is about the stock. I want to go around the room and just get your kind of quick take on what happens for the stock to, let's say, run up to 19. We got 17 right now. What happens for the stock to go down to 14? Or let's say 20 and 14. Let's do the range. What gets it to 14? What gets it 20? What gets it flat? If anyone has any thoughts on that. Arnie or Dom, we'll start with you.
Yeah, we let's say we have a bad miss in revenue. We go to like 15, 14. If we actually have 25% to 30% revenue growth and hit our profit estimates, you can see it run into 20.
Okay, Arnie?
I like investing because it is not only a bet on the reality, but a bet against what others perceive as the reality. And so far, we have been seeing that analysts have a sort of 20% growth expected for the company, which I think it is very low compared with the real potential of the company. 1 year ago, I would have said, okay, I mean, 20% is reasonable. I hope for 20%. At this point, given the dramatic shift with AIP, what we have been discussed so far, what I shared previously, I'm very confident that we will see way more than that 20%. So my personal bet, and I'm betting this with I have only Palantir in my portfolio, is that analyst and the market in aggregate is wrong in the growth expectations incorporating in the stock price. Therefore, I personally expect a bit of not a bit in terms of like real results, but a bit in terms of perception, because it is clear at this point companies want AI, the market is seeking AI, and they really need some evidence that Palantir belongs to this cluster of companies like NVIDIA, Supermicrocomputer, whatever. Like they need a hint, okay, Palantir deserves to be in the AI cluster, and I think in this quarter we will see that. Now, if that doesn't happen, I'm still fine, because what I really care is the business development. I don't have any options, so I'm not forced to think short term. The stock goes down, okay, fine. Like there is 1 billion buyback potentially triggering. Like if at this point I think it would be rational to buy back a bit. I think at 14 it would make no sense not to buy back aggressively. So it's like in my mind is the downside is kind of protected, and I'm happy to benefit from the potential upside.
Okay. Matt, your thoughts on what happens to the stock?
What do I think happens to the stock? Let's see. I don't know. I thought it was going to go to 2025, like you said, Amit, but it did not. I'm just trying to think. Yeah, I really don't have any thoughts. I haven't really put too much thought into it. I've mostly just been looking at where the customer count grows. I just noticed today, though, it's kind of saddening. I haven't bought any shares since late 2022. So I'd like to see it drop, but I don't think it will. I think it'll either go up slightly from here, slightly below 20, or stay where it's kind of at. Or if it does pop, it'll probably come back down to the $17, $18 range. But my thought process is I really hope that we do see all the reacceleration that Emir is talking about, and everyone has been talking about this reacceleration of revenue that we really hope. But I still think it's going to be some time. As we've kind of alluded to, the revenue piece we know always takes a little bit of time, and I think we're growing the footprint. I think we're getting the customers through the door, but will the revenue actually show up? I think it's going to take some time. So I don't necessarily think we're going to pop like everyone thinks we will, but I hope I'm wrong.
Palantir to zero.
Palantir to zero.
Emir, your thoughts on the stock?
Yeah, I think results will be as expected. I don't think they're gonna diverge too much. I think we're gonna see the numbers that we've been talking about. It seemed like we're all more or less aligned. And as everyone is talking about, it's all about the projections. It's not so much about the current results, but anything out. So I echo Arnie in that I don't think it's out of the question to hear a 25% growth projection or more, and that would catapult the stock up. I think there will be a shocker quarter. I am convinced of that. I think there will be one quarter where they just shock us, even as investors. They're going to be like, well, we're seeing this now, and you can expect this from us. And I think we're going to move back. Yeah, don't shock the world like PayPal did, but a real shock. And I think I see 30% on the cards. I mean, all this compounding will come back to Palantir sooner or later. So there will be a shocker quarter. I don't think it's going to be Q4 23. Perhaps Q1, the second half of 24. But personally, if I see some confirmations of what I am expecting, like we've been talking about, I'll be a buyer. But yeah, if the stock price moves up or down, I think it's all in the projections for the coming year and future.
And you, Amit?
Me? Yeah, I think if we get 25% plus guidance, we run to 20. I think the street's like, holy crap, AI, it's real, profitable growth. They're not doing 18% year over year. AIP is exploding. That Kohl's supermarket deal is going to be expanding into the Kohl's of Japan, the Kohl's of South Korea. It's going to be a beautiful growth story, and I think the stock will run. If it's below 20%, I think we see 15 or 14. I mean, you cannot be at this valuation growing at 19%, 18%. It's just not possible. I don't think any of the analysts will like it. Wall Street's not going to like it. Retail's not going to save it. It's going to tank. It's going to be tough. And if it comes into 22, 23, I think it still could tank, but that would be a decent dip. Or it could go higher just off pure momentum of 20+% growth. More likely it stays flat in that range. So I agree. Customer count is really important. If we get close to 490, 500 customers, I'm assuming we did 300 boot camps in Q4 and we convert 10% of them optimistically. I don't know if that is a conservative or optimistic projection, but that means 30 net new clients on AIP. Then you have to talk about monetization. And then to get to that 490 level, Emir was talking about, we need another 7 to 10 clients that are, not based on boot camps. And based on how Karp was talking these past 2 weeks at the WEF forum, he seems arrogant in a good way. He seems excited in a good way. And even if Q4 doesn't crush, as long as guidance is in line with crushing, then I think it's going to be really exciting. So
you said that 10% conversion from the bootcamp, and we were discussing this in the chat. And what do you personally expect the conversion rate from a bootcamp is? I personally expect something in the 80s. I know it sounds a lot, but
80?
Yes, because if you're a new client, and you have a company that delivers something that works in 2 days, while you have spent 3 years for something that doesn't work, don't you at least buy the initial deal? I personally would say that. So, but
here's my thing. What a boot camp is people from the company come to Palantir and they get like a proof of concept or a working product that they get to use. But then those are not the CEOs. They have to go back to the
you're right, Amit. But why would you send your people to a boot camp?
Because it's free.
I know, but
you do that all the time.
But you have to have an interest from the company.
No, sure. I could be interested in something that's going to cost money, but if it's a free demo, then I'll send my junior analyst there, my best software engineer, whatever.
Like, have you guys ever seen statistics of different sales funnels and how they convert? And, I don't know if you have seen this, that if you have an automated webinar, then it's normally like 3-4%. If you have a live webinar, it's usually like 10% of the people that show up. And in-person events very often have 20-30% conversion rates. So I also think that, I don't think that it's 80%, but like the AIP bootcamp should have a very high conversion rate, because the people that show up there, they have to have a prior interest of implementing an AIP solution. It's not a secret that Palantir is an expensive company. It is quite some money to send your people out there to boot camp. Like, you have to pay flight tickets, hotels, salaries. So like I think if the conversion rate would be 10%, it would be a failure on the boot camp.
No, I disagree, dude. I think 10% is very optimistic. And selling anything is really difficult. I mean, look, hold on. Let me use an example. There's 350 people here. If we ask all of them to like, they're not all going to like, even though it's very simple to like the video, right? Like, converting is hard no matter what. So to me, assuming 80% conversion is tough.
Guys, what do you think in the chat? The conversion rate of
says Master Sergeant. There's Master Sergeant in the comments there, who says, I do
he's
boot
joking
camps
as well. I just think we can't be delusional here. We can't be delusional and assume they're going to convert 8 out of 10 clients.
Look, Arnie, the only thing I'm going to say is I think that there is no pricing strategy still on the AIP, and I think that if they're smart, then there is a grandfather deal after the boot camp. Mm-hmm. And I think where you are right is, out of those high conversion numbers, like, how much stays? Like, that is a question. But I would be surprised if the conversion rate is 10%. I think that would be a failure on the bootcamp.
Okay,
I don't think it's a failure, dude.
It's probably too much, but I think the conversion rate here is insane. especially for the customers that have some pain previously. It's like if we were too early in the stage where no company has ever spent on software, I would say the conversion rate would be relatively low. But since we are already at the point where many companies have spent a lot of money into software projects that didn't deliver and spent a lot of time and money, there was a feedback from those shared by Ted Mabry, I think. Custom.
Yeah,
feedback
you're
from
talking about Ted
customers.
Marbury. You're talking about Ted Marbury, his tweet, his article where he shared
Yeah.
the picture and he was talking about boot camps
But
working.
there was one sentence hinting the perfect customer for boot camps are those who already experienced some pain, because they know that building this stuff is painfully costly, also in terms of time, energy. So if in a couple of days you can deliver the same output or so, like it is a
But
no-brainer.
see, Arnie, the problem to me, and then we'll get Emir here, is all of that sounds good on paper, but then you have to have a C-suite actually sign the deal. And to get from boot camp to the to get from boot camp to the deal, that's not an easy process at all.
But the C-suite had to agree for them to go to the boot camp, because I don't believe that the employees can book tickets.
Vince, it's called window shopping.
But I'm also curious if they are getting other companies that have already signed up to go to boot camps, right? Because you might have a company that says,
yes, they are. They have current customers who are there.
Yeah, exactly. So you might have some customers that might be in the engineering department, and now the finance department's like, well, maybe this can help us. And so you can't say that all 10 of the clients that go, one of or two of them are existing clients. And so that would also reduce, the amount of new clients, but it would help accelerate the growth of net dollar retention, right? So I think that there's multiple avenues where you could look for revenue growth here.
I think.
Let me get Emir real quick, and then I'll get you, Arnie. Let me get Emir. Emir, what's your thoughts on conversion?
Just to push back to what Vince is saying, I've been to many conferences. I've looked at many solutions. I mean, it's part of the job to know what's out there. It doesn't mean there's any higher likelihood for closing that deal. So I'm more aligned with Amit here, but I'm sort of in between. If I'm going to shoot from the hip, I'm going to say perhaps a third, roughly. Conversion rate, if I'm going to shoot from the hip. But we actually do have a sales expert here. So Dom, why don't you tell us?
I'm curious, before Dom chimes in, what conferences particularly have you been attending that you notice all these different sales going on?
Who are you talking to?
You, Emir. You said you've been to a bunch of different conferences. I'm just curious which ones.
Oh, yeah. We've looked at many solutions, especially at my current work. We've looked at a lot of
healthcare stuff, right, Emir?
ITSM systems. I can't mention details, unfortunately. But yeah, it's common. Even in my prior job, looking at new solutions coming out from unknowns, looking at the known solutions, going to Cisco conferences, it's very common, at least in my line of work too.
I would underscore one thing. When you go to a conference, you start with a mindset of, I'm searching for ideas. If I find something useful, maybe I can buy. Here is completely different. You go to a boot camp already having in your hands a problem you need to solve because you were not able to solve that problem with internal forces, with the consultants or previous software companies. So it's like you're already, you go to a boot camp already trying to solve a problem. If a company solves that problem in a good time, efficiently, and gives you a nice experience, by the way, it seems these AAP bootcamps are also funny to participate into. I don't see how at least you don't say, okay, let's start a small deal with this company. And as Matt said, also from what I saw, there was like a prioritization of the existing customers first to make these bootcamps so that even the existing customers actually know why this AAP is cool. So it is true that let's say all the bootcamps, if all the bootcamps were made with existing customers, we would not see a crazy growth in terms of customer count, but probably we would see more net dollar retention. But either way, I consider it positively. I think the fact that you go to a bootcamp not with the idea of maybe I solve, maybe I find something, but you go to a bootcamp like you go to a therapist, because you know you have a problem and you want that therapist to solve your problem. If you have a hint, okay, this therapist is actually good, you give the money to the therapist.
You know, I agree with everything you're saying, but that also assumes that Palantir is the only one selling this type of solution. I mean, Palantirs might be the best according to us because we know a lot about it, and we know that there are a lot of cosplayers out there pretending to do something they don't. But it doesn't mean that Palantir is the only seller available. I mean, I'm sure Microsoft is vying for the same type of client. I'm sure Databricks are out there. I'm sure everyone is running similar stuff. I mean, we know that the bootcamp concept was straight up stolen by Snowflake, right? I mean, there's a lot of competition out there. So in isolation, yes, if you're like, well, I want to solve this, so I'm going to Palantir with the intention of purchasing. I mean, it makes sense in a vacuum, but we're not living in a vacuum. I mean, there are a lot of people claiming to solve the same problems, and they need
there
to
are people
consider
claiming to solve the problem.
Yeah.
But once you have,
let's get Dom in here. Let's get Dom. He's been waiting to talk. Go ahead, Dom.
Yeah, I mean, I would just say and I've talked to several sales people at Palantir. I mean, the close rates, and this is public knowledge, you've seen it is much higher with boot camps, right? But to Arnie's point, they know they have a problem. Also, I think Palantir is very selective on who they're inviting to these boot camps. There is a market, there is a TAM, there's a specific type of customer they're going after to ensure that they're getting the close rates. Me personally, where I think that they would thrive, and at the end of the day, the person that's typically signing off on these deals is the COO and the CEO. The IT team doesn't care about Palantir. If anything, they're fighting Palantir because they're afraid that it's going to replace their Databricks. It's going to replace their Snowflake. You're going to replace me because you're going to automate me. So where they really need to focus, I would love to see them host some kind of COO business operation conference where they invite all the COOs from all the big companies, seed some customers in there who are COOs there. Now you're cooking with gas, because that's the persona that wants to actually spend the money, cut you the check, because they're measured on saving the company money. The CTO isn't, the IT director's not, the CISO's not. So only the CEO, CFO, and COO, that's your money. Like, that's who you want to get after.
It's pretty funny. I mean, building on what Dom was talking about, like, I've never seen them say, ooh, let's limit how much we use Databricks, or ooh, let's limit how much we're using AWS or Azure, but they talk about limiting the amount of we use Palantir. And I think a lot of it is because, like, they'll bring up active use cases in UDoc to be like, this will save X, Y, and Z. We can get rid of this legacy. And they're like, no. We have a contract negotiation, whatever, coming up. And it's like, damn, like, what is that really? But one of the things I've also seen is just naturally we've used less and less Databricks over time. It was a big push at the beginning of 2023, late 2022. And I've seen them kind of pull back from that. And I think that's just natural. It's not like people are actively trying to stop the use of Databricks. I just don't think that it has the capability that we have of Foundry within our organization to truly make step changes in what we want to do and make efficiencies across the entire org and between different departments, right?
Dom, give us a closure rate first.
Yeah, I would say boot camps are probably closing at probably 35 to 45%.
Boom, Don, you knew all this and you let us bicker on.
Yeah, I feel smarter instantly.
Don, you let us bicker on. You knew all this. No.
We got 80. We got 80 for Arnie, 10 for me. Dom's like, you know what? It's 35. That's it. That's the answer.
Do you think they will disclose?
They would not disclose, but your average sales rate's probably roughly in enterprise sales between 20 and 22%. If you're closing above 25, you're doing a hell of a job. And if you're closing a third, you're doing really well. So they're targeting a specific audience, and I know Code can't probably talk in detail about this, but they know who they want in those boot camps, and also the customers typically have a problem that they want to bring that production data. It's not like you can just get free willy-nilly and bring your production data anywhere outside your org. You have to get sign off to do that as well. So,
well, here's the thing, Dom. If they do 30% off of 300 boot camps, we're gonna get 90 customers next quarter, which is.
Keep in mind though, they're not cutting huge checks right off the bat.
That's okay.
Too.
That's okay, because I think all of us believe in the long-term vision if we get in there.
Yes.
But 90 customers in Q4, if they say we went from 453 to almost 550,
you remember that. You remember that's what I said, that there's a chance that you get a hockey stick in that and not a revenue increase, and I think it would still send the stock soaring.
And if the stock dips on that, that's where the OG bulls, I think, get a real Christmas gift, because we know what's going to go on.
Yeah.
But just quickly, wasn't there? I have some sort of memory of this, but I don't remember the details. Maybe you guys do. Was it at Davos or some other like global conference where people said that just getting access to Palantir was like a golden ticket? Like it was impossible for people who were interested to actually attend a boot camp. Was it at Davos, and who said that? Like I have some vague
I think you're right.
there.
I'm forgetting who said that, but I think you're right.
So we already know that people want to see AIP, and they're like, people just can't get access to it. So it's very like a luxury item. You know how Ferrari sells like one car less than their total demand on purpose just to entice people?
Correct.
Maybe something like that.
All right, good stuff. We got to end it here. Thank you, everybody, for joining. 347 people. You're up till 12 a.m. You guys are all crazy just like us, but this is what makes this community so awesome. It's fun to have a community and be part of this world. We're all from all across the world. Everyone's here. By the way, but while we're ending off, put in the chat where you're watching from, which country, which state.
Yeah, I was just saying, this community is amazing. Like, I don't think any other stock has this other than Tesla.
But by the way, I just want to say, it's so funny how I saw on Finance Junkies about the Kohl's partnership. Then I saw tweets. Then I saw the tweet of someone finding that this company was working with Microsoft. And then below that tweet, Palantir 5 minutes ago, we have a new partnership with Kohl's. I'm like, you guys are so late. It's like you were front run by like.
This community is obsessive over this company, dude. And it's not because about making money. Like, making money is such an elementary way to describe this whole community that's been developed. It's about trying to be Sherlock Holmes and figure out what this company is doing, why they're doing it. Obviously, we all believe in the mission. And then it's like, can the company be the company we think it can become? And it's just fun, the process of trying to figure it out,
Well, it just goes to show that people are more so aligning themselves, not necessarily with what people make the most money, but who has the best purpose and why, right? It's why people love Costco. It's why people love Tesla. It's adding a sense of belonging and purpose into why you're investing in those companies. And it's truly a religion to some people, right? It's not just about making money at that point. It's delivering with purpose. And I think that's a huge route that I think a lot of companies should look into. And I think a lot of people are starting to recognize that. And I think gone are the days of shareholder supremacy with respect to like only buybacks, only dividends, only into more of the people that are specifically focusing on delivering with purpose. That's why Apple's been successful and many other companies. And I believe Palantir is following that MO as well. Delayed gratification, if that makes sense.
Dude, let me read these real quick, Arnie, then I'll let you go. We got Morocco, San Diego. We got Coach trapped in communist California, Nebraska, Sunnyvale from Laura, Top Secret Quebec, Iowa for Brent, Indiana, Chicago, USA, California, Milwaukee, Norway, Las Vegas, Texas, Alaska. This is just incredible. This is great. Arnie, go ahead.
No, what's really funny is that since I worked in finance, I know the mental archetype of the person that works there. So the classical CFA, the classical asset manager, that when he says something like us, sharing a lot of content on YouTube, on X, they just think, oh, these stupid guys with a huge confirmation bias. I got a retweet from the post I shared previously, hinting like, oh, the schizo time again. And then below comments from institutional investors. Oh, these dumb retail, these guys, they like. I really can't understand how people can create a community around a single stock. So institutional investors can't mentally accept this. Like there are very, very few bright minds that see the value that we are building, and they are like probably 1%. Every person I know that works in finance is kind of disgusted about the idea of sharing finance content online, because typically all this knowledge is just blocked into asset managers, some banks, and it's like what we are doing is disrupting finance. I know. I think this is the big value ArcK Cathy Wood delivered. Not much the performance, but the idea that there is value in sharing knowledge, which is the opposite of what hedge funds typically do. When you work in finance, typically you don't talk at all about what you're doing. You're scared that competition takes your idea, stuff like that. So you speak internally with maybe the analyst, internally the company, but the idea that you take your knowledge and you spread it out is not really
it's crowdsourcing.
common.
It's crowdsourcing information, and it's fun, and it makes people more excited. Like finance is fun, investing is fun somehow. Like,
and I'll tell you, if you don't see the value we are generating, you deserve underperformance, because the value that we are generating with these conversations, and also we are having fun, I think is invaluable.
yeah, it's the relationships you build along the way. I mean, it's that's what really, really. I mean, I got to meet Matt in Vegas. Like, who would have thought me and Matt would have met in Vegas because of this podcast? So it's really important stuff, and hopefully the company performs and we make some good money and we keep things going. And I know most people aren't interested in selling, even if the stock does well, but it'll show we're in the right trajectory, even if it sells off after, right? Which is the most.
Yeah, believe it or not, yeah. For Amit's birthday, I actually was able to cut his food up and feed him. It was absolutely insane. Vegas was great.
It was great. He cut up the steak, and I was like, "Oh, this I get to eat. Someone's feeding me. This is awesome."
Yeah.
Like even someone like Alice, right? She DM'd me about Australia and the Cones supermarket, and she was giving me DD about that. Like, there's so much crowdsourcing of information because she's from Australia. It's just great stuff. Great stuff from everybody. All right, folks. Thank you all for being here. We'll see you 3:30 p.m. on this channel. I'll be here with Arnie and Vince and anyone else who wants to join, and we'll be live streaming Palantir Q4 2023 earnings.
I'm excited. To the fucking moon.
Later.
Bye-bye.